Hello and welcome everybody. Thank you for joining our panel discussion today on enhancing domestic payments with wholesale CBDC, which is proudly conducted by OMFIF's Digital Monetary Institute in collaboration with Visa. Now today we'll be unpacking the motivation behind upgrading wholesale payment systems. We'll define the problems trying to be solved with CBDC domestically and across borders, exploring themes such as the compatibility and interoperability between networks at a time when private sector initiatives are expanding and central banks' research is growing. So I'm Katie Ann Wilson, I'm Managing Director of the DMI, and today I'm very, very pleased to be joined by our expert panelists. We have Catherine Gu, Global Head of CBDC and Protocol from Visa, Claudine Herman, Director of Innovation and Financial Market Infrastructures from the Banque de France, Philip Muller, Banking Operations Analyst at the Swiss National Bank, and Bashak Toprak, EME Head of Coin Systems and Global Product Owner of Deposit Tokens at Onyx by JP Morgan. Thank you all for joining. We're very pleased to also be joined by an esteemed audience of over 400 central banks, regulators, commercial banks, fintech companies, international financial institutions, and payment service providers. Do let us know your thoughts and opinions and responses throughout. We'll feed your questions to the panelists in the live chat. There's also some audience poll questions, so do please vote and we'll discuss them towards the end. So Claudine, I'd love to turn to you first. The Banque de France has definitely been leading wholesale CBDC projects. So if you could just tell us, why do you see the need to improve wholesale transactions at the domestic level and what your motivations are?
First of all, thank you very much, Katie-Ann, for inviting me to this session. It's always a great pleasure to have these good exchanges. Well, you really actually mentioned that Banque de France has been very much involved in experiments. We started as early as 2020 on these experiments. But maybe before coming to the motivation, let's be clear about the underlying principles and what we're talking about. You mentioned indeed domestic payments, and I think it's important to have this in mind because there are very strong use cases also for cross-border CBDC. But here we concentrate on the settlement in the jurisdiction. And secondly, you mentioned wholesale. So here we are on the settlement on financial markets. And indeed, I think it's a good starting point because obviously we have very efficient and well-performing financial market infrastructures. Well, I can give the example of the Eurosystem infrastructures where we had the consolidation earlier this year of the target services. So with a good functioning. However, I think what has come into our landscape is really a new type of animal, which is called digital assets. And these new forms of assets, whether they're in a native form or whether they are traditional assets which are transformed into digital forms, we cannot settle them yet on our FMI. So we have to devise ways of doing so. And this is really the starting point. So it's really the emergence of these new tokenized assets really coming from the market. And we have to find a solution. And I will come to this. I think the second point is that central banks will still need to ensure the safety of the settlement of such transactions. We still need to have a very safe and secure framework for settling wholesale financial transactions. And I think it's obviously well the principles for financial market infrastructures which put this to the fore. You might have running the risk of having some private monies like stablecoins, for example, which carry whatever they design, they still carry some liquidity and some credit risk, whereas central bank money has no credit nor liquidity risk. So this is the second motivation, I think. And I will come to the third one, which is sovereignty. If new assets and new settlement assets of private money, such as stablecoin, for example, are being used for settling systemically important transactions on systemically important markets, then you run the risk of losing sovereignty over your money. And I think it's a key topic for central banks. And this comes to another motivation, which is indeed the conduct of monetary policy. Because if you take the example, you have, for example, a private money, a stable coin, which is used very widely, even on the financial market, then how can the central bank conduct its monetary policy if it has no control over the settlement asset or over the money that circulates everywhere? So I think it's a big point, and the cherry on the cake would be, of course, financial stability, because the central bank has in its mandate this crucial aspect of financial stability, so ensuring the safety of transactions and ensuring that there is confidence in the money on the market as a whole. So I think there are, well, these 5 key points are very important. So many challenges, and the reasons for central banks to offer and to start experimenting on CBDC and wholesale market is that, well, reasons are as exposed. Of course, I think there is still a long way to go. So we're not quite there. We're only at the beginning at this stage. You still have some technological hurdles to overcome. For example, scalability, resilience are key issues. And how to get there is also the second point, in that it will probably need some more time and maybe have different steps in doing so. So I don't think it would be a big bang approach, but a step-by-step approach for doing so.
Certainly. Thank you. That was a really useful tour of the key motivations. I'm sure they are shared with many other central banks looking at wholesale CBDC.
Catherine, I'd love to turn to you next. Bank of France and Swiss National Bank have very clearly said that part of the driver is settlement of new digital assets or tokenized assets. So I'd love to understand a little bit more of the benefits of that. So what are some of the benefits of transitioning to representing ownership of financial assets on blockchain? What kind of trends are you seeing towards tokenization in the market?
Thank you, KTM, for having me here. And we're very happy to sponsor and support this event. I think it's very important first just to have these public and private dialogues. But second, I echo very much what Philip just said, that this entire space is about technology, it's about innovation. I think there's a lot of unknowns that we're simply just trying to test and learning by doing. And hence this goes back to some of your questions about what are the use cases, what are the things we're hearing from our clients who are interested in exploring. I would say that as we're looking at DLT as a piece of technology, there's certainly a lot of hope in which that it can significantly improve operational efficiency. And this really depends on what sector, what sort of specific use cases and user experience you're looking at. Whether you're like someone who is sitting on a bank doing treasury cash management, or whether you're a supplier doing trade finance, or just even simply a user trying to send money cross-border to home for remittance purpose and such. There is currently a lot of frictions in the payment industry, as we know, and hence, whether it's DLT or not, I think technology overall is meant to be improving that set of rails and set of infrastructure just to make things a lot more seamless. So I think operational efficiency certainly is something we're hearing. And a lot of, I think, clients, as they're starting to experiment, it starts with that cost-saving perspective. I think looking beyond that, though, there's a lot of exciting possibilities in which DLT, smart contracts, and blockchain has sort of demonstrated to date. Now, this is, I think, something potentially net new, in a sense we do have existing programmability in the current infrastructure. But I think we all know that it's somewhat sort of limited. You can have auto payments and such, but you can't really build like a brand new protocol or brand new sort of application directly on top of the platform. So I think the thinking really goes, and this is, I think, more sort of exploratory than certain at this stage, that in the future, maybe we can treat money as this digital platform, and on top of this you can then start building applications. And the reason we say that is because we've seen some of the experiments happening in real time directly on other public blockchains, what's going on with the decentralized finance, that you can build just so many interesting businesses and creativity on top of that. And hence I do think that if we leverage the programmability feature of money appropriately, there could be a lot of scope for future use cases that we might not even be thinking about now.
Now, that's a great point, and we've heard central banks echo. I think Brazil mentioned in their previous CBDC work that they're also thinking about CBDC as a digital platform for innovation. So there's definitely consensus growing in the market for that. Bashak, what are your thoughts on the expanding world of tokenization of assets, and what are you seeing?
Thank you. Thanks, Katie, and thanks for inviting me to this panel. Yeah, I mean, I echo everything that's been said. I think there are two ways to look at this, which I think we touched on briefly as well. Are we improving the existing systems, or are we bringing something new, right? A new business model. I think we're doing both, and I think DLT gives us the ability to target these two objectives. I think the way we look at it is we see the whole digital money spectrum really interconnected between both commercial bank money as well as kind of central bank money. And I think from what we've been involved in as part of Onyx, we were able to leverage on-chain cash for example, intraday repo use case, and we were able to prove benefits that brings. And I think that use case means both you're solving for existing sort of operational efficiencies, but also you're introducing a new type of kind of business model, because you're able to compress the timelines and you can be really specific about the timing of the settlements, the atomic settlements. So those use cases are, I think, out there, not just us, but others as well have proven that, these bring benefits to financial markets. And I think the next level from there is, how do we bring this, to the whole chain with, wholesale CBDC, wholesale settlements between banks and, financial markets, and how can we then take it to the cross-border level as well, and what are the options and models that we can implement. So I think that's kind of, solving for the whole chain. Yeah. But of course, it needs to be step by step to sort of build on.
Yes, no, definitely. I want to expand on atomic settlement as well. But Bashak, you just raised an important point on tokenized deposits and all these, I suppose, different types of solutions. So I want to just hone in on that for a second. On if we have all these different solutions available, as well as stable coins and tokenized deposits and wholesale CBDC, I want to just ask the group, what are the differences? Why have we got all this choice? Claudine, perhaps if I could go to you first.
Well, it's a big question, a big issue, and I think we all, collectively examining what is at stake here. I think indeed it's a kind of a whole spectrum of different types of settlement assets that you have, and that can possibly settle transactions, but you have different levels of risks attached to this. Of course, credit and liquidity risk. I think a lot needs to be continued in terms of assessing what tokenized deposits are. And I know that there is a lot of work going on at international level to also try and define what a tokenized deposit is. can it benefit from the insurance deposit insurance schemes, for example? So it's an issue which is important. And also to try and see what are the use cases for the different types of settlement assets. Because at the moment, some digital assets do not benefit from, let's say, traditional infrastructures. And also there are some niche products which do not find a solution for the moment. So you may have some different possibilities which are open, and we really need to assess collectively the benefits compared to the risk. So I think we need to further explore this. We have seen, for example, that for some niche products like unlisted shares or shares of funds, it can be very useful to have a settlement on a DLT, because you do not have the settlement of this type of asset on traditional payment systems or platforms. So, and I think it's also the role of the central bank. I mean, not only to of course, participate in the regulation, for example, of crypto assets and stable coins, which could be used as a settlement asset, but also to experiment on, for example, tokenized deposits beyond wholesale CBDC to better understand how this could work.
I mean, Başak, I wonder if you want to chip in now on the definition of tokenized deposits. I know you've done a lot of work on this. How would you define them?
Sure. So the way we see it is really kind of putting the commercial bank money on chain, right? And I think, obviously, bank deposits are already regulated, subject to, several, minimum capital requirements, reserve requirements. So changing the platform that it exists and putting it on chain, kind of an extension of what it already is. And with that, Claudine mentioned, obviously, we need to make sure, what the model is. I think the key aspect of deposit tokens is, how does it travel from, one bank environment to another, and how do we ensure, there is a trust ecosystem which is based on, agreed sort of frameworks, right? And I think that what we've been saying and advocating is that, some of these frameworks are already out there with, correspondent bank models where, we provide clearing services to other banks, for example. So there is already, sort of enhanced due diligence that is done. So we can potentially leverage some of these models, and with the new technology and possibilities of using on-chain protocols, we can achieve actually an efficient way of making sure we know where the deposit tokens travel, right? And we know the boundaries. And we can get information of who holds the deposit tokens. So these are all kind of technically possible concepts. And I think it's about kind of starting to work on these concepts and proving that, rules can be set up on chain to leverage, protocols can be set up to support the transfer of deposit tokens from one bank environment to another. And it doesn't need to be a bank environment. It could be, other networks as well that could potentially, tokens could travel within these other networks, which could be, large networks as well.
Yeah, no, certainly. I mean, Catherine, you were nodding. Would you like to chip in here?
Yeah, I mean, firstly, I think just going back to the original question, we do, of course, having more and more different forms factors of money. And but I think it's also nice to compare to what is today already, right? In the sense, we have cash, we have central bank money, we have commercial bank money, we have credit, we have debit and loans. So the world is already kind of full of these different varieties, and it's for the right reason, because you have different personas, right, out there looking for the different type of money to consume. And hence I think we will continue down that road. Of course, with technology, maybe you can introduce even more digital kind of forms of money, and that's already emerging as we speak. So I think, given, like, taking this almost as a given condition, therefore, the more important question for Visa for us to think about is on that interoperability aspect, right? Because as there's more different forms of money emerging, as there's more different rails getting built, the key question is, how do you really ensure that the future is indeed interoperable? If we're only just taking a look within the DLT space itself, they are not by default interoperable either, because they have different consensus mechanism, different sort of programming languages and such. So someone needs to do that plumbing, and then to take it into a broader sort of scope, then we're looking at how we can connect the DLT with respect to existing payment rails, whether that's RTGS or even ACH and such like that we do need to figure out the right financial plumbing. And hence I think that's where a lot of the work, in which we're putting a lot of effort trying to really think hard how, again, from a front end sort of user experience, whether you're a corporate business or a retail, you shouldn't be worried about that, right? Your experience should be as seamless as possible, because money just moves as is. But of course, the back end, the infrastructure is super critical to ensure that it's resilient and it is interoperable.
Definitely. And Catherine, just a follow-up thought on that then. So Visa's interoperability model goes above and beyond connecting blockchains. You are an additional network that then connects to blockchain systems, regardless of their protocols or permissioned or permissionless. What are the kind of underlying assumptions of that new model?
Yeah, so our strategy has always been very deeply embedded into this notion of a network strategy, in the sense that we recognize that there's many different networks emerging who are already existing. They have the right liquidities. Our goal is to really interconnect all of that. So I think from a technology perspective, for every single connectivity tissue, we need to build them out simply. And taking DLT is a very good example, because as we're looking at all of these different options for blockchain solutions, whether it's I can give an example in which, for example, we built something called universal payment channels. That's an experiment, but what it demonstrated, and I think payment channel is something for CBDC has also been experimented, is essentially connecting into different CBDC networks that could be hosted by the respective central banks. And hence, through these payment channels, to Basak's earlier example, you can achieve atomic settlement, meaning that either all transactions succeed or none of the transactions succeed. And that's a very neat solution, because immediately you can have the benefit of reducing counterparty risk, because if anything is at risk, none of the transactions will go through. So we have experimented with that, and we used it in last year as we're part of the Brazil's CBDC Live Challenge. We demonstrated how a simulated CBDC, for example, could be interoperable with a stablecoin out there. Of course, bearing all the sort of compliance checks and such, you can ensure that the plumbing works and to really make the money flow. So yeah.
Yeah, fascinating idea, and very clever that you've managed to sort of avoid the major issues with DLT, which is the protocols and the lack of interoperability and scalability. You've overcome that with this network. Philip, I mean, Catherine's raised a lot of important issues. We're delving into cross-border CBDCs now, and the connectivity and interoperability between systems. I'd really like to just hear your thoughts first on perhaps compatibility between systems, the traditional, and DLT based. I know this was quite a big emphasis of Helvetia. So just to get your thoughts on the interoperability puzzle within probably the domestic setting first, and stable coins, and DLT based and traditional systems.
Sure, and I think it goes back to something that Basak said. Basically, I mean, we need to take baby steps. We cannot go all in and make a big bang and just move over to DLT. And that's basically something that we strongly believe. If we move to a more tokenized ecosystem, it will be a development and not a big bang. So there will be times, and probably extended times, where we need to have the traditional world to interoperate with the new DLT world. And that's actually what we looked at Helvetia phase 2. So in phase 1, we actually managed to bring cash on ledger and have wholesale CBDC present. And then the next question we ask is, well, now it's fair enough, and we have a nice GUI where we can see the balances of the different parties involved. But I mean, those balances, they need to be reflected in our core banking system. They need to be reflected in the core banking system of the banks for regulatory reporting and others risk tools they have in place. So it's really about bringing that information back. And one thing that we focused on was really to be minimum invasive all the time and leveraging what is out there. And then, of course, the easy solution there was to rely on message-based information transfer using ISO 20022 to actually bring the information back to the core banking system in a form that core banking system do not need to do much. They get the information as they get it from the RTGS system. It's just simply a different system. And I think the colleagues from SDX did a very good job there to basically translate what's going on the DLT side into what is the representation in a standard format like ISO 20022. And I think that solves already a lot on the domestic level. And I think it also has the potential to basically solve interoperability issues on an international level. If we can agree on standards, I think then we already make a big approach. We probably don't need that one platform where every central bank, every deposits are present, but we need ways to make those systems as interoperable as possible. And I think there we need a lot of collaboration between central banks, but also with the public sector to make that happen.
Certainly, perhaps not this one unified ledger, but a set of interoperable networks. Claudine, Philip has set us up nicely to talk more on cross-border CBDCs and interoperability. So I just wanted to get your thoughts on where you thought this was heading, perhaps some considerations on Project Jura, which I think both of you were involved in. As Philip has already mentioned, interlinking CBDCs cross-border implies common standards, common technical interfaces, numerous problems. So what's your current thinking on that?
Well, our thinking has been evolving, and I have to mention also that we continue work with the SNB, notably with the Mariana project, where we explore cross-border CBDC. I think indeed, maybe there are some different steps. Of course, you hear a lot at the moment regarding the interlinking of existing fast payment system, because it's one possible avenue for improving cross-border payments and alleviating frictions. And maybe this can be done in a relatively short time. We have seen how challenging it is to have interoperability of our RTGS systems. And so maybe it's a good thing to explore and to experiment on interoperability of CBDCs just at the project or experimentation level to see how this works. And we have seen, notably through the Mariana project, that we can have some different standards, but which can be eventually shared in a common on a common network. So we show that this works. So I think that issue raised by Philip regarding standards is very important. And also one aspect is probably the governance, which is not the simplest issue to tackle. So we have to think it beforehand. And knowing that also technology can help us a lot, because with smart contracts, you can determine For example, the access which you want to give or the conditions upon you would want a transaction to be achieved. So we have a lot of area to work on. And I would very much agree on the fact that it's probably going to be very difficult, even in the medium term, to have this global platform, but maybe think a bit more about having some regional platforms. And Mariana is really a case where we add on top of these exchanges of CBDCs, we also have this pool of liquidity to facilitate cross-border exchanges and to optimize liquidity. So probably the main risk of the platforms is fragmentation. So important to collectively think about it. And one important aspect is sovereignty. So it's really more collaboration and cooperation, and thought has to be given to what the priorities and the objectives are. So it's a big work program ahead of us.
Yes, lots to cover. I mean, and just so the audience is aware, and for my understanding, the Project Marina is about how we might trade and settle like the FX basically in a future tokenized world. That's the main aim. Yeah.
Exactly, and it just has the added feature of so you have domestic, let's say, networks which are controlled by each central bank, and you have an automated market maker which pools the liquidity and which can optimize FX. So it's an added feature, and this AMM comes from the decentralized finance. So it's quite a new feature that's being explored by the central banks. With the SNB, the BIS Innovation Hubs, and also the MAS.
Yeah. They're two really hot topics, I think, right now. I mean, Bashak, I'd love to actually get your thoughts on that project briefly, but also the role of the private sector, JP Morgan, like yourself, in helping with this challenge of interoperability cross-border. Where do you sit in, and perhaps also the role of Partior, because I think it's very relevant in this area.
Sure. And to Claudine's point around automated market makers, we've done an experiment as well with Banque de France and MAS around the use of kind of liquidity pools and AMMs, where we were able to kind of explore this concept from DeFi. So I think the interoperability point is definitely there, and I think, you know, as we said, you know, we're not going to get to a unified ledger anytime soon. And I agree with Philip's comment that, you know, we will see a world where, you know, cash needs to be in multiple venues. So that's a reality. But we also think that, you know, commercial bank money and central bank money, there are benefits in having both types of money in a shared ledger environment to support specific use cases. And that's where we see Partior coming in, which really came out of a project UBIN with the MAS a couple of years ago, where you know, the banks came together, JP Morgan and DBS and Temasek funded this platform as a global clearing and settlement platform. And recently Standard Chartered joined as well to start with the commercial bank money, as you know, this is what we can do right now, right? So having a digital Nostro environment on the blockchain for banks to support settlements in multiple currencies, having almost like a correspondent bank environment on DLT. And from there, the concept is sort of evolving into, well, CBDCs can also be issued on this platform, and that's where we could really enable interbank settlements between the settlement banks using CBDCs of, you know, multiple jurisdictions. And we can also enable PVP use cases on a cross-border basis. But that's not the only use case for Partior. Partior also supports cross-border payments, and also it can act as a almost like a multi-bank cash concentration structure for corporates as well. So it has multiple use cases, but definitely, wholesale CBDC in conjunction with commercial bank money is also a use case where this shared ledger environment can support bringing those together and enabling the PVP use cases.
And definitely, and I suppose the fact that it grew out of a central bank, a CBDC project already, it has a huge potential to have central banks, for them to have nodes already on there. So it's a natural progression for Partior.
Yes, yeah, indeed.
And I mean, if I could just try and bridge Catherine's points to yours, we could see a world there where you have Partior and its blockchain network with its banking partners and central banking partners, but then the universal payment channel connecting Partior with another network. Would that be a fair summary, Catherine? Is that where the UPC could fit into all this?
Yeah, certainly would love to try that. haven't really done it, but that's exactly the type of things that makes a lot of sense for being the network of networks to interconnect between all these different ledger systems.
Good. I think it's really useful to connect the dots. We have so many private sector initiatives, so many central bank initiatives, and trying to place them in the market is a huge feat. But I think that's a useful overview. I want to bring in, we have a responder actually online as well, Joe Volano, who's Director of Business Development CBDC at Ripple. Joe, I want to bring you in to add any thoughts you have on the panel and any questions you'd like to put to the panelists.
Yeah, hi, Katie Ann. And just for housekeeping, my camera doesn't seem to be working, so I'm happy to just do the voiceover. Not intending to be rude though by keeping it off. If somebody wants to enable it, please do. The first thing I would say is, I always learn a ton when I watch these OMFIF panels, and today's no exception. I've got a ream full of notes in front of me because this is such a smart discussion from obviously people on the front lines of doing this work. So really well done, and thank you to all the panelists. I'll key in on a couple of things that I took note of and try to connect the dots up to a question that I'd really be curious to hear some conversation on. So first of all, on Project Mariana, that's a fascinating body of work, and it's something Ripple in parallel is exploring, how we can facilitate cross-border, cross-currency transactions using an automated market maker. And one of the things I think Claudine commented on earlier was the idea of pools of liquidity. And I think that's one of the often overlooked elements of this, is having that liquidity in place is really critical to making sure those models function. So that's just one observation I heard earlier. When we think about wholesale CBDC and some of the work Ripple is doing, we have projects happening globally with different central banks. One that I'll highlight is with the Central Bank of Colombia, where we are exploring whether a WCBDC can be used as a credit risk-free settlement asset for government bonds with respect to their high-value payment system. It's a really interesting project, and it typifies the kind of work we're doing and engagements and the conversations we're having with different central banks, all of which vary. But there are some of those common themes. One thing, Katie Ann, that I think you might have brought up was a question around, what are the differences between these different assets in the marketplace, and why do we need them? And I'd like to build on that a little bit and ask a further question: what are the implications of having all of these different assets, not just from like a transacting and a settlement standpoint with respect to the type of the asset, but also from a market structure standpoint. And where I'm heading with this is a comment that I heard last week or the week prior from the ECB, kind of expressing a concern around monopolistic positioning and competition as it relates to the convergence of the public and the private sector here. Fabio Panetta was commenting on PayPal's dollar-denominated stablecoin, and I've got his quote open in front of me, so it's very briefly I'll read it. He said, while the market entry of big techs and other large payment providers may initially promote innovation, competition could be severely hampered if they attain a monopolistic position, as we've seen in other digital sectors. I'd love to hear from the group, and we've got representation from industry, from government. Is that a real risk? Do you accept the premise that that is something that is plausible? If so, how should central banks think about mitigating and managing that risk so don't end up with walled gardens and monopolistic behaviors that ultimately don't serve the best interest of the consumer?
Yeah, no, very good points there. Philip, would you like to, shall we take that to the concern of competition for me first, Joe, and then let's go on to your Project Marina question.
I can take a go on it. I mean, that's a very, very complex question you're asking there. I mean, how I can try to answer at least part of it, right? We see, I think it's a good thing that we see a lot of different means of payment evolving, because that's the only way how innovation can really thrive and to figure out which might be the best option. I think there it really for the public sector to make that lift, and more so on the central bank side, that we make sure that the basic infrastructure, the plumbing, I think, Catherine, you put it nicely, is working properly to actually have innovation built on top of it. And I mean, what we also feel it's really important, and I think it's something we should in some sense protect, is really the two-tiered system we currently have. I mean, we have central bank money and we have commercial solutions out there today already, and I think that's something that is well functioning. And I think that also maybe makes the monopoly question you raised, or the monopoly problem we might face. At least we would have still two forms of money: wholesale CBDC potentially, and a solution from Google. So I think it's a fair question, and I think I hope we still have enough time to find clever solutions or clever answers to tackle such problems in the future.
Claudine, anything to add? That was I think a very fair summary.
Maybe if I can compliment Philip, I very much agree, of course, with what Philip said. I think it's important indeed to maintain the two-tier model and to encourage and spur innovation, and also for us central banks to continue experimenting with the private sector, with our commercial banks and with fintechs as well, because they have a lot of new ideas, and also they know the consumers very well because they're their clients. At the same time, we have to be careful about the potential rise of very big actors in the landscape, and again, well, with financial stability concerned. So the point is really the regulation of such actors, and also ensure that obviously private monies do not take all the landscape, and that we keep a good balance between private and public money. I think it's important to preserve this. Thank you.
Definitely. Catherine, Bashak, if anything to add on, I suppose, the implications of these multiple forms of on-chain money and wider implications for competition?
I'm happy to kick off this. I think, yes, really like the question coming from Joe, because I do think that competition is very important. And I think, for what it's worth, with all the different forms of digital currency merging, that in itself is generating competition, because ultimately it's the users who choose, right? Who use the one that makes the most sense for them. And I think in this whole session, we really dive deep into the importance of interoperability, whether that's coming from the infrastructure perspective, or more importantly, coming from the standard, the scheme, and the rules that we can do. But I think just thinking beyond, what else of the important features, I would highlight things such as privacy, resiliency, and scalability are all the super important things to make this entire payment whole. And therefore, I think the role that the private sector can play is ensuring that all these features are being built out and met with satisfaction, and hence, all the range of value-added services, which, as an example, we spend a lot of time and effort to ensure a very resilient system preventing fraud, because technology is simply getting better on both sides. So, I think statistically over the past 5 years, we dedicated $10 billion+ just trying to prevent on cybersecurity and such. So I think all these things need to be taken into account as we're encouraging the private sector, the sort of competition front. So yeah.
Yeah, I would add that I think echoing the two-tier model which we talked about, and I think I would say that we're not really, when we talk about central bank money and commercial bank money, we're not talking about a different type of asset. It's the same type, but presented on a different technology. So the form changes, but the asset itself is the same. But the emergence of other types of digital monies, privately issued, digital payment coins, introduces potential other risks to the environment, which of course regulation there is important. And we need to make sure financial stability is there. Things like credit disintermediation, etc., is important. But also education in terms of users, right? Understanding of the risk profile of these different instruments is extremely important. And we've seen e-money evolve, right, in different ways. Again, education there has been important as well. When you have your money with an e-money provider, where do you take the risk, and how does it get treated? So I think that's part of the puzzle as well, that we need to kind of make sure education is there for the users as well.
Definitely, and I think we'll see a stronger understanding of governance of stablecoins in the coming few months. Joe, thank you for your question. Any final points to add before we move on?
No, I thought, I thoroughly appreciated everybody's thoughts and agree largely with the sentiment. So thank you so much.
Thanks, Joe. Now, Catherine, you raised resilience, which I think is really important, and I would like us to spend just a few minutes on this. You mentioned that there's a lot of work going into it on the private sector side and Visa's side, but I wanted to just actually ask the wider panel of how they're thinking about the effect of a system, and with all these technology changes, what are the wider implications for operational reliability, security, and resilience, which is basically a question on the use of DLT in these wholesale payments, and are they up to the job? What are your current thinking on that? Perhaps if I could go to Claudine first.
Well, indeed, a lot of work to do, I think. Of course, there are new technologies also carry new risks, and we have to assess these. And experimentations is not enough. I think we need to have a deeper dive on this. Payments and payment systems are very sensitive areas for central banks and for governments, because you have to ensure that this works smoothly. For example, just to mention this, there can be some specific laws, and for example, in France we have the military programming law, which focuses on systems of vital importance, and this can encompass hospitals, payment systems, and such infrastructures, and these are subject to specific requirements. And so, for example, you need to have some certification, some external audit, also some pen test, for example. So if these new technologies are to bring live new systems, they will probably have to abide by some requirements. I think it's very important for the trust, for maintaining the trust. And I know there are some projects going on at the BIS Innovation Hub levels, and indeed resilience is key. And we'll have to ensure that this works before we go live in production of any type of system, in my view.
Sorry, my mute button was hidden. I fully agree with Claudine, and I would even go one step further. Maybe, I mean, in today's system, resilience is extremely important, and if we imagine a future where there are more use cases on a platform that more people and also the public rely on, I think then resilience becomes even more important. I mean, just on an experience I had yesterday where I tried to buy a train ticket. Normally I do that via the app. The app wasn't working, and it was not only me now waiting in front of the vending machine to actually get a ticket to ride the train. I think that's really kind of a problem if we have so many use cases, so many different businesses relying on the same platform. Then I think resilience becomes even more important because even an hour of downtime could pose a lot of risks in the whole system.
Certainly. I mean, Bashak, Catherine, have we solved that on the private sector side, do you think?
I think some of the benefits that, obviously DLT brings in terms of, 24/7, etc., also brings this aspect of like, there's no downtime, right? So you can't like say it's the weekend and we can fix things. So it means we need to, act faster, solve faster, fix faster. So there is definitely that. I think, obviously, the existing use cases, most of the existing use cases of DLT are based on, private permissioned chains where, participants have kind of full control of the environment. That helps to, ensure that it's under control, right? And I think, what banks and others, digital asset platforms have done is, apply the usual controls and processes that we've been used to as financial service providers, subject to throughout. This is a new technology, but I think what we've managed to do over the past years we have internal teams that understand this technology, understand working with this technology, and counter any issues and leverage new tools as well to support further efficiency on the platforms.
And like at Visa, what we're really proud of is to say that we're 99.9999% available at all times, and that just takes a lot of effort, right, to ensure that is resilient. And to your question, I don't think it can ever be solved because the challenges are just getting harder as people are getting cleverer of how to attack the system. So it's a matter of we need to continuously to improve on our existing system, and that makes it even more interesting as we're thinking about, say, to support other new emerging rails. There's just unknown risks that we're not familiar with. I would like to add in the fact that for any of these system designs, none of them is sort of single dimension because you want to balance so many different areas, right? And I think, for example, whether we're on a shared or unified ledger, there's then the balance between efficiency, resiliency, but then privacy as well. So all these things, how do you kind of strike that right balance? Maybe it's different country by country, but I think that's going to be a really critical piece when we come to the final design.
Definitely, and it's an excellent point to end on. I just wanted to quickly share with you the poll results. We asked the audience, what's the key catalyst for financial system innovation through wholesale CBDC? We had most people vote for tokenization of financial markets. That's quite in line with what we were saying. 50% on that, 42% on cross-border payments, 33% on limitations around RTGS upgrades, and 25% felt that it was to DLT and blockchain advancements. And then only 8% said the introduction of potential systemic stablecoins, which I thought was quite interesting. So our audience feels like the systemic stablecoin introduction is less of a reason for wholesale CBDC than cross-border payments and tokenization. So for you to think about and take away, but thank you so much, everyone, for your thoughts. I think we've scratched the surface on a lot of issues, but we've really raised a lot of key questions that will be addressed in the next phase of work. Thank you so much, and we look forward to discussing this again within the DMI. And do get in touch with any further questions or thoughts from the panel. We'd love to carry on the conversation. Have a lovely rest of your day.